All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Friday. Happy Friday, everybody. November 3rd, 2023. Glad to be with you here on the GAR Capital YouTube channel. If you haven't already, make sure to hit the subscribe button so you don't miss any of our next videos. We do have a video coming up this weekend, recapping the week and previewing the next week. I hope to see you as a viewer on the YouTube video that we will post. Let's go ahead and get started. We did have non-farm payroll this morning. We also had Apple earnings yesterday, so we're going to go over that as well. I placed a note on the Discord. If you're interested in joining our Discord channel, it is free in terms of the live market blog. Link is in the description below. Would be happy to see you there. So again, we do have the quick cheat sheet on why the job number matters. Again, I wrote it all down, basically question and answer format, as if someone was asking me exactly what this means and such. So let's go over quickly the actual headline. 150,000 jobs added versus the 180,000 jobs expected. The actual number was 3.9% in terms of unemployment rate. The forecast was 3.8, so up about 0.1%. Dow is up 152 points. Nasdaq's up 0.32%. The S&P, we hit TP1 on our long, 43.56, 1747 on the Russell, up about 1.5% this morning. So again, we want to see the broadening of the rally. We need Russell to pick up. We need the Dow as well, the big boys. It just can't be all tech, guys. Remember that. We need what we call market breadth. Advancers versus decliners. We can't have just the 8 big magnificent 8 just running the show. We need broadening of this rally, guys. Happy Friday. Everyone's pretty happy today. I'm assuming everyone is logging into their CNBC app or looking at their portfolio and seeing nice and green. Well, this is what you get sometimes. November is a great month for stocks. We've been talking about that seasonally. 10-year Treasury yield, 4.535%. That is now the lowest point that we've had since Labor Day in terms of yields. 82.99 in crude oil futures, up 0.65%. Gasoline futures are down $2.24. Starting to see sub $3 prices on gas again here in Central Florida, which is always nice. 2007 gold futures, 0.68%. Again, that's because of the dollars being down, now below 106, 105.30, down 0.77%. The macro backdrop is helping out, so that's where we differentiate. And I just had that discussion with Investment Club. Well, I was talking about it, excuse me, that yes, we are having a short squeeze. We talked about that. We talked about oversold conditions. We talked about that 50% retrace and how important it was for buyers to defend that level. We are now above that, much above that. 41.55, we even broke below. And if you guys remember in the weekly video, I talked about how supports can be kind of like, like a little bit like a mattress. It's not just a board. So again, you can break a little bit and kind of sink in. Does it look like a bottom to you? Could be. But again, look where we are. We are now just retracing back to that trend line. This could all roll over, just so you know. Again, things get ahead of ourselves in terms of overbought conditions. The good news is that the macro support, the backdrop, is being supportive with lower than expected job growth. It's not negative or anything, but again, just lower than expected job growth. Again, I expound on that a little bit more on that note that I put on the blog. But again, looking at the trend line here, this is the trend line that we've had really since the October lows of last year. 4,400 being a big level of support that we had, that we held pretty much all year, well, pretty much since June. And then we finally broke down in October. So again, all that summer rally was retraced. That's why that zone is rather important. So what do we always talk about when we talk about technicals? When the chart flips up or down, resistance becomes support, support becomes resistance. That's just kind of how the way it goes as you're targeting. So again, if we kind of look at the 43.75 to 4,400 zone, you can see that's shaded in. That would be above the 50-day moving average. We are above the 20-day moving average. We bounced above the 200-day moving average. You do have the 100 there. So again, we want to see the Russell continue to move higher because those are higher betas. Those are the names that have been completely slammed. Again, regional banks, certain energy companies, zombie companies that actually don't even make money. But again, that's where we are. And you can see that really clean breakdown of that range there. We are back above the 20, but we're getting close again to hitting our head on that level of support that we broke down. So all we're trying to do here, as in terms of price action, what it seems, is recoup October. Now again, if we recoup October, that puts us in an inflection point, because October is when we broke support. So the question is, what level in October we're going to go to? Are we going to go back to the level of October in the beginning? Because that's where we are now. If we're in the top range of October, that gets you to 44.32. Do we break above that? Just get back to September and you're back around 45.50. Now as a poker player, now as a trader, you got to start thinking to your head, 4,400, is that a level where everyone is going to get excited again or try to get out? I think it's the latter. I think right at 4,400, I think we pull back again. You're not going to get just one straight shot to the moon. We want to see if we can pull back and defend at least either 4,300, which we just broke. What I prefer would be us to get to around 4,200, maybe 4,150, hold that, and then we can play longs again going into December, if that were the case. Now, the market doesn't care what I think or what I want, but 4,400 being a very key level, again, that's more than likely where you want to kind of get out of your longs and see if we can even get above that or even test there. All we are is out of that trend line now. And remember, once you start getting those kind of short squeeze bounces, a lot of people that were in certain positions that are long are more than likely just going to kind of either cut their losses or just be happy to be back at break even. So let's go ahead and kind of pivot that into Apple. Apple reported earnings, 4 consecutive quarters of lower sales, but yet all-time highs in revenue in terms of iPhone sales. Super cycle. We closed yesterday, at 177.57. We're about $4 away from that now. Not exactly horrific, not exactly, oh my God, the world's ending. Apple's just what it is at this point. You just really just hit your head on some resistance here on this trend line down. So you need to get above 180 really to prove the fact that this is not just, a technical pattern where we're just kind of hitting our head on lower highs and then hit down to lower lows. In terms of the actual earnings report, I mean, expectations were rather low. Forecasting, again, they don't really do forecasting. They gave some implied forecasting, but in terms of Apple, you're really paying for the name. You're paying for that $186 billion cash pile that they have, and the fact that people like their products and ecosystem, because the services margins are only increasing and services sales are increasing as well. The handset, again, they did say that the iPhone had its best sales overall, revenue breaking for the quarter. That was the September quarter. That's the super cycle quarter. So they at least beat that. I don't think they raised prices on the phones last year or this year as well. So that could be organic, not just raising prices to bring in revenue. That's not sustainable, obviously, because then that becomes variable, the phone costs. And again, when it comes to suppliers and wholesalers, the last thing you want to do is have any kind of deviation from what expectations, because prices change so rather quickly. Even in just the commodities, the electronics that are in that iPhone, those commodities change in price. So again, you don't want too much deviation in forecast. Obviously, that's getting very, very boring, very, very accounting talk. So just wanted to give that heads up as I was reading the Apple information as it came in. Double beat, top and bottom line. I mean, if you're an Apple owner, I don't think anyone wants to sell today. Are you running out to buy Apple today? Probably not. There is better opportunities out there, like in Microsoft, for example, which I still have calls in. We did hit Microsoft. No, we hit Amazon yesterday for calls. We got into Microsoft. We are still in it yesterday, as of yesterday, excuse me. So break 352. We're in that kind of top end of that zone where we had our earnings report. And let's see if we break it. 1, 2, but we did break above it in July. So if we can get to 351, 370 seems to be next in line. That'll get you to new all-time highs on Microsoft. In my opinion, a better setup if you're looking for more upside than Apple. I think Microsoft all around has been lapping the field. Granted, Microsoft and Apple in 2 different categories. Other than computers, and the one thing, the max sales number on Apple was rather low and missed expectations. They just came out with that new Max lineup. So I'm not going to buy one. I've had my Mac since 2017, works absolutely fine. So again, not needed here, Tim Cook. for a new iMac, even though they're very, very slick. So no questions this morning. I assume everyone is in a good place. Everyone's pretty happy with seeing green on the board. Again, I like Microsoft. I do have Mara calls open for next week. We did hit TP1 on futures. Dollar yen for my Forex guys, I didn't forget y'all, but again, it has been rather volatile. So again, it would have been back and forth, back and forth. I want to see if we can really break down just a tad more. Maybe we can get around 149. And again, guys, you know, I still expect that dollar yen continues to fall. We are now at that below the 20-day. So Forex traders, I'm gonna keep an eye on it. Maybe we get below 149. We'll use that 20-day right around 149.86, 150 as our stop, and then we are targeting 146.65. Again, we're just looking for a pullback. Again, overbought conditions on dollar yen. Again, we're trying to swing it, trying to catch it. We'll do our best, but we are below the 20, rather important. So that's where we are this morning. Let's see yields, put the note up. All right, so happy Friday, everybody. Thanks again for joining me. We will see you guys this weekend for the next video. Go ahead and recapping our week, talking about what's to come in the future, and a lot more cool stuff. We will see you then. Have a great rest of your day. Cheers.